Welcome to Accountable, where your business is our business. Hosted by David R. Peters. Today's guest is Vic Taylor.
Hi, everyone. Welcome to Accountable, the podcast for CFOs by a CFO. My name's Dave. The topic for today is budgeting. And I have to tell you that budgeting is one of those things. I don't know that I have ever met an accountant that really gets fired up about budgeting. I'm just not sure that it's one of those things that a lot of folks that they really look forward to. Maybe there's one out there that I haven't met. Certainly that's possible, but I'm just not sure that this is one of those topics that accountants are really passionate about. I think a lot of CFOs, a lot of controllers, they look at budgeting as kind of being a necessary evil. It's one of those things that they do because it's a part of corporate life. It's something that is a part of their job. They understand that it's necessary. It's necessary for the organization, but I'm not sure that it's necessarily something that they look forward to. And I don't think it's because it's too technical of a topic or anything like that. Budgeting is not an overly technical exercise most of the time. And I don't think it's sort of one of those things that people have trouble sort of grasping the reasoning behind. I think that the part that they struggle with, the part that maybe they just don't like, is the people aspect of budgeting, because there's sort of this natural butting of heads that happens in the budgeting process. A lot of times, as the finance leader, you're in a position where you have to say no. You have to be the one that is kind of the voice of reason in the organization. You're the one that kind of has to step in when a department head is asking for more and more resources, and you may have to say, you know what, we just don't have the ability to do that right now. It's not something that we're going to be able to take on this year. And I think a lot of CPAs, I think a lot of folks in accounting leadership positions, they really struggle with that because it's tough. It's tough to say no. I think a lot of accountants, I think they naturally want people to be happy with them. They want to please people, and telling them no can sometimes go over poorly. And I think it especially gets difficult when it's in areas such as headcount and things like that. I don't know that I've ever met a department head that says, no, Dave, don't worry about it. I have everything that I need in my department's budget this year. So I think it's a tough exercise. And so I think because it's a tough exercise and because it's really a matter of navigating people, I think our guest today is a great guest to talk about budgeting. My guest today is Vic Taylor, and Vic's been in a lot of accounting leadership positions for many years. He's currently a managing partner at Taylor Accounting Group. He does a lot of corporate coaching and things like that, so he helps accountants get better at being accountants. He helps accountants deal with some of the things that accountants aren't typically strong in, and a lot of that has to do with people skills. It's the people things that accountants tend to struggle with, and so that's why I think he's a very good guest to talk about this topic, because he's been in that role where you're the one saying no, and I think he has a passion for helping accountants become better at navigating some of these people issues that we have to face. Budgeting isn't going away. Your organizations aren't going to stop budgeting, so we need to find ways to get better at it. And I'm hoping that you'll enjoy this conversation that I had with Vic Taylor, because I think he really points out some good tips, some good tricks in terms of how to navigate those budgeting conversations and do it successfully in a productive way. So enjoy my conversation today with Vic Taylor. My guest this time on Accountable is Vic Taylor from Taylor Accounting Group. Hi, Vic. Welcome to Accountable.
Hey, David. Good to see you.
Good to see you too, my friend. So this episode of Accountable, we get to talk about something that I think that every CFO ever has had to go through, the budgeting process. This is one of those things that I think it's one of those things that every CFO has to go through. And I'm not sure that all of us necessarily like it. I think it's kind of a necessary thing, though, that we have to do if we're running a company. So I think that you especially you have a passion for coaching and helping small businesses get through this budgeting process. So I think that you're the perfect guest to really talk about this topic. And hopefully today, I'm hoping that we can give some folks some pointers and things like that as they're working through this budgeting process with their own company.
Oh, yeah,
So
absolutely.
yeah, so how do you start the budgeting process? I mean, I think that we all go through this, but how do you start? I mean, where do you start this what can be a very big project of budgeting every year?
David, it's interesting. For most accountants and probably for most business people, budget just makes them squirm. For accountants, it seems like it's just another thing on our checkbox we have to do. But then for the management, it's something that they want, but yet they don't really want to approach. And then
Right.
for the mainline workers, they really don't want to talk about it all, especially the management level. They just think, oh, there's accounting again. They're going to browbeat me. Management's going to tell me I have to make $1 million when I can only have no money to actually spend on anything, and they want me
Right.
to do the same amount of work with the least amount of staff I can. And it becomes a conversation. I think that to make a budget successful, most accounting and most management teams need to have a conversation. And a lot of people don't do that. Usually it's, oh, here's a memo from accounting. We've been told to do a budget, and we send out a bunch of reports. We don't talk to anybody about how to actually do it. So I think if you really do it correctly, a budget makes you very successful. It can make business successful, give you some good insight of where you're going, where you want to go. But I think it's the conversation. Why are we doing a budget? Start
Yeah.
there.
Yeah.
And then, actually understand the company, understand the management, but then also help the front line on why we're having this budget. Why are we doing this? All this work when, I'm just going to get beat up about it, but someone else is going to hand me the budget and tell me how I'm going to fulfill that budget. So
Yeah.
yeah, a conversation.
I think that that's a great point because and I think that that's what I meant when I said that a minute ago, that this is one of those things that I don't think that this is the favorite thing for a lot
Right.
of CFOs. And in fact, I think a good number of us, if we're truly honest, and I would imagine that a good number of our listeners would say this as well, they dread the budgeting process
Yeah.
because those conversations are tough. Because I mean, to your point, I think people sometimes your other department heads and things like that, they feel like you're on their case. It's almost like the teacher getting after the student in grade school or something.
Yeah. Oh, absolutely. And and it always becomes down where it's like who's against who, and
Right.
that's not what you're trying to achieve. What you're actually trying to do is make sure the business is successful, and the business successful, then we all make more money. Hopefully, we get some bonuses, some nice raises. Wow. Okay, now I'm starting to get it. But also, it gives you structure. A budget can give you a structure
Yeah.
for your plan, and a lot of people think, "Oh, I'm just going to do another budget, and then it's going to sit on a shelf and collect dust until next year." No, you're a participant. You're a part of it. And, and it's everybody. It's frontline workers. It's the lower level management. It's C-suite. It's the whole group. And it's not where we're working against each other. It's what are we trying to achieve together? And I think that's important.
Yeah, I think you're dead on that. So tell me about that a little bit because I think you're right. It's got to start with a conversation. What's the substance of that conversation though? Because I mean, I think a lot of people, they look at the budgeting process as, here's the teacher who's going to get on my case about spending too much, not going to give me head count, basically is going to tell me no to everything.
Mhm.
And so how do we sort of get them in the right mindset where it's not just, kind of on the one extreme, it's like, give me as much money as I possibly can to spend for my department. Or on the other extreme where they're not asking for enough things to really necessarily, to get by. How do we sort of find that balance, where we kind of get them to the right spot where it's kind of this balance between what my department really needs versus what is kind of best for the
Well,
company.
no, I love where you're coming from, and you're exactly right. The conversation really needs to start at the upper level, or whoever is the main driver of the budget, and that conversation of what it is they're really trying to achieve. And again, I've talked with C-suite level, and I've talked with small businesses, and it always comes out to the same thing: I want to make more money. What's my bottom line?
Yeah.
And so, and I've heard the lower level management that have to actually put that in place and live it day by day. It's always, well, what number do they want me to meet this time that I'm just going to lose by? And that's, so we're starting off with failure right off the bat. Well, we don't want that. We want success. And with a good budget, we can achieve that. And I think helping people see that. And it's almost like a parent sometimes. And I know this may upset people, but there are times where management does have a responsibility to tell the lower level management that, no, you really can't have any more headcount. I see some inefficiencies, and I'm seeing these things. But instead of being that over them, there should be a conversation of, here's what I'm seeing. You need more headcount. Why don't you tell me why you need more headcount? And I think bridging the gap between the two parties is important. And the insights of CFOs, CPAs, what we can provide and help people to see is what we're trying to achieve and where we're trying to go. But also, I think there's a disconnect on upper management that they have a tendency to think they can make more money than what they're really going to make, or that, you can keep running that piece of equipment that's really met its life expectancy about 20 years ago, but you're still running it. Well, maybe you should do some capital investments, and what you gain from those efficiencies. But also, it's having the lower level management meet with the upper level and helping them share what they're feeling, and not having that combative relationship. And I know it sounds funny for accountants to be talking about this, but I really believe the relationship that the parties have is what our success will come from.
I completely agree with you. I think you hit the nail on the head there. I mean, it's funny because I think that at least the times I'll speak for myself here. The times when I've shared with department heads kind of what the overall scheme looks like, when I've shared forecasts with them, when I've shared kind of the overall budget with them, then they understand, and then all of a sudden we're kind of in the right on the same side. Whereas if it's just like, hey, marketing, I need you to hit this revenue per marketing dollar number. That's that is they don't understand kind of how they fit, I think, within the overall game plan.
Right. Yeah, and you're spot on, David. I think it's funny. I can still remember so many different stories, and I've done this a long time with a lot of different size companies. But it's always fascinated me to hear the stories of, well, from upper level, it's, well, what does our bottom line need to be? Okay, this is what they're going to have to do. And then they want you to back into what sales number that looks like, or what cuts it have to be. But then on the lower level, it's always, well, I'm going to throw a budget together, and it's not going to be pretty. It's going to be really much more than what I'm really needing, because management's always going to deny my first take.
Yeah.
And so instead of them actually putting a lot of effort in the first try, they're just saying, well, right now, I have $100,000 of revenue, but you know what? I'm going to say that I need 100 more employees, and I'm going to hit $10 million. And it's just these ridiculous games that get played.
Yeah.
And, I think there's a conversation, again, we keep going back to conversations, but I think just someone stepping back and saying, okay, guys, we right now have this level of growth. I'd like to see a 5% growth. And here's how I think we like to achieve it. But what do you think you can do? Can you do a 5% growth, and what do you need to get there? And all of a sudden, we have changed the conversation. People need to be vested in the process. If you make it where they're part of the process instead of just being handed it like a mommy and daddy handing down, something to the kid and saying, hey, you're going to go, back into the house. It's more of a conversation of, hey, what would you like to do? We still need to get this done. What can you do to help us succeed on that?
If you don't mind me asking, have you shared like forecasts and things like that with kind of the, at least the department heads, and then, kind of maybe the wider staff? That was something.
I'm so glad. Yeah. Yeah. No, I'm glad you brought that up.
Yeah. I used to do that. And that always used to seem to kind of help when, it would help the conversation. I mean, we might still disagree. Like, the department head may still say to me, Dave, I still need, 4 more people. And I may still say, actually, I think you need 1. But, but it at least helps us kind of calibrate at least a bit.
I love that. And I love the word calibration. And I think a part of the conversation that has to be had is what is a forecast and what is a budget?
Right.
A budget is it's really a chance for people to have some good comparative data with prior years. But what is it that they're wanting to achieve? In a budget, you're goal setting. What is it you want, and where do you want to be? And it's not just a 1 year. I'm really big on the 1, 3, and 5 year game plans.
Okay.
Because I think that there's a lot of change. And I've talked about change management, and you and I've talked about that, where you have to make certain changes. It does not happen overnight. You don't go from sitting on your couch to running a marathon the next day.
Sure.
It's a process. And so I think when you get into a forecast, to me, it's something fluid. And a forecast is critical because it's constantly rolling. It's giving you an idea, short term, where are we at, where we're going. So you're right that having a forecast of, especially when most of us start budgeting, if you're a calendar year type of filer, you start your budgeting probably in July or August, and then you still got 4 months of your year potentially, and you're saying, well, how do I even know how I'm going to finish this year? A good solid forecast, and you really should have something like that where you're predicting the next month, but really a rolling 12. I love a rolling 12, and it gives you a chance to get an idea of how are we really doing, how are we acting on it. But then you apply that against the budget. So one of the things that I think you need to do is have the forecast, have your actual, and then have your budget. How are we performing against those things? And then when you start getting to budget process, we have a rolling 12 forecast, which you could use as a template for a budget. But it's not your be all end all, because on a good solid budget, you got your capital expenditures, you got your cash flows, and on a forecast you can do cash flows too, but you're more real time, and you're short. And I think there's a tendency that people look at forecasting as just another budget. Well, it's not, because it really gives you a perspective of how am I really doing right now? And when is the money coming in? People forget cash is king. We have to have it.
Sure.
And so a good cash flow forecast is critical. And then you say, okay, with that good forecast, how am I doing against a budget?
Yeah.
Am I on target? And you need to make those adjustments. Too often, I think we've said, in August, I said that I was going to have $1 million in sales in January, but no, I had $500,000.
Yeah.
Well, what did I have? What did I base it on? And you start tightening those things up together. And I think you'll see a between your actual and the forecast and the budget, you use those techniques together. And I know we're talking more about budget, but I think it's a part of this process.
So is there rules around kind of when you adjust a forecast? Where is it like the forecast is fluid, but like the budget is kind of set in stone, or is it how do you sort of navigate and sort of, I guess, differentiate between those two? What are sort of like the rules around when you can adjust things, or can you never adjust them?
No, great question. I mean, for me, a budget is pretty solid. Okay. I think you put that in place. I think it needs to be a guidebook. I think it needs to be your foundation of what you're wanting the year to look like, because I think it's important that there's a reason you thought you could make that budget. There's certain criteria you thought was going to happen. And when people do the budgeting, they really should make notes of timing of things. What did they think was going to happen? Why did they think they were going to land a new customer? Did sales say that they were going to land it? And then you get some accountability for people. Hey, you said this was going to happen at this certain time. It never happened. Why not?
Right.
And I think that's a reasonable conversation. Now, the forecast, to me, it's fluid. So depending on the time of your industry, time of your business, and what you do, that you can actually keep that forecast updated. I don't know if you want to go necessarily where it's more than monthly, but you could do biweekly. But you can have something where you're constantly adjusting that. How are we doing? People have a tendency to forget that in accounting, for so often we do historical.
Yeah.
And we're reporting numbers. At best, we're a month behind, usually by the time we get real reports. So that's not giving you, it's great. You know how you truly did. That's great. but a forecast allows you to make adjustments. It's like driving a car. If you're heading down the road, are you going to look behind you and say, wow, I really did pretty well the last 10 miles? That's really not going to help you for this process. If you want to be successful in business, you need to be looking how my next 10 miles are going to go. And while you're doing that, your budget is your destination. If I'm making a trip down to Florida, then that is my destination. But how I get there is what interstates am I going to take? Where are your gas breaks going to be? Things like that. Those are your stopping points. And a good forecast can allow you to really see that.
Yeah.
And that's what I find exciting. And so, yeah, I think having the budget, especially for capital planning, is a big deal. For big projects, I think is important. Big customers that you think you're going to land, big marketing initiatives, new product rollout. That's where a solid budget would come in.
I think too, I mean, I used to sort of differentiate between the two that, the budget was something that was line by line, very detailed. And we did that once a year. That was a once a year deal.
Yep.
Whereas your forecast, that was something that we could adjust. When I was at Compare, we used to do quarterly board meetings at least, sometimes more often than that. Yeah. And the forecast was something that it was high level. It was for board members, and it was really to kind of give us kind of a long-term perspective on where the company was going. And so that we could also focus on kind of those key drivers that were really going to drive business.
Yeah.
I don't know if your experience has been similar or if you did something different.
No, very similar. Yeah, absolutely. And I think using KPIs is a big factor. Identifying what metrics are the most important to you in your industry.
Yeah,
absolutely. And I think when you're working on it, the forecast and if you get too detailed, especially on a forecast, you get bogged down.
Yeah.
And then you're not going to have anything that you can use in real time. So I always use the analogy of almost a cruise ship or the Titanic even, and you're just cruising down the water and what is it going to look like, and where are you going with it? And, the budget was building the ship. The forecast is travel the ship. And I think that's important that people keep certain KPI indicators, especially for forecasting. I think that's a big deal. You've got to have something that quickly tells you you've got an issue. And I think KPIs allow that. And I think a high level forecasting, but also, again, on a forecast, cash flow forecasting.
Yeah.
A lot of my clients that I work with, we always talk about, I said, it's not a sale until you got the cash in the bank.
Yeah.
So getting a true cash flow forecast really helps them because on a budget, they can see, unfortunately, a lot of people have a tendency to look just at the end of the year and say, oh, look how much money I'm going to make in the year.
Yeah.
But you forgot that your accounts receivable are too high and your cash isn't coming in the door. And, there's no game plan for that. Well, a good forecast is saying, oh, you know what? This guy just went bankrupt and now we're in trouble.
Yeah.
And so those type of conversations are important.
Yeah, I think so too. And also I think too that, this process itself, I think does have something to do, it is affected at least on some level on where your business is kind of within the business life cycle. I mean, as most of my career has been in startups. When you're in a startup, I mean, the fifth year of a 5-year forecast is probably less meaningful than, than the immediate year. Simply because, I mean, it's a startup. I mean, we hope that the profit line is moving, up and to the right, but whether it does or not, I think, I think that process is very different when you have a startup versus like a more mature company where you kind of know who your major customers are. You kind of know what your cash flows are going to look like. You kind of know where your capital improvements need to happen and what headcount needs to look like, those types of things. I think the conversation changes.
Yeah, no, absolutely right. And you're right. The specific with what industry you're working on and what level are they at? And especially a lot of my clients are small business startups,
sure.
Not very large. They don't have a lot of capital. And, that's always one of those tougher conversations is they are like, oh, I got money now. Well, you got money now. Where are you going to be 6 months from now?
Right.
And I think you're spot on. And I think it's an interesting conversation that you have with them. Again, like you said, what industry and startups, very different challenges from someone who is well established. And people forget that when they do these forecasts and these budgets, that life is fluid. And that's a challenge with us. I always laugh at, and I'm sure most of your listeners are going to be the same, but when you do a budget, most people they do a download the trial balance somehow, and then they start from there. It's like, oh, well, this is how we've done, and now here's your budget, and take 2%, add to it, and and get across the board as some basis.
Well, and
there's no thought in it.
Well, yeah, that's exactly it. I mean, there's no thought in it, right? I mean, so I mean, you're assuming that that this year is a good base year, right? I mean, so that's sort of, there's an inherent limitation there. Let me ask you about something that I think really causes us CPAs, I think, to just that we don't like this conversation, but I think headcount tends to be so for most companies, as I'm sure headcount is usually the largest item on the income statement. I mean, that is usually the largest expense for most companies, not all, but a good number of them. And that's the conversation that I think that causes us CPAs. If we get anxious about the budgeting conversation, it's usually because we know that somebody's going to ask for more headcount than we think that they should have, or that the company really has the capacity to give them. And so how do we navigate that conversation? I mean, is there any sort of like tips, tricks, things like that you've things that you've found that have worked, or things that you found that haven't?
That's the ultimate challenge. I mean, and we all understand we're all overworked. We all want, we want someone else to kind of help take some of the pressure off of us. And, and it's true of non-accounts. And you're right. The angst that you feel from knowing someone and trying to, in their mind, they're locked in. Hey, I'm working 60-hour weeks. I need to have someone else. And in your mind, you're saying, well, your department's losing money. So, what are we going to do? And I hate that conversation. I think part of it is, when you sit down with them and it's coming, and and they should really break down what each person is doing. And one of the things that I have found that works is actually bring in HR. And HR, we'll sit down, we'll go through what their people, what each role is of each of their people, what their rates of pay are, and then we'll try to sit down and say, okay, what other duties are they doing that they shouldn't be doing, or are they doing them the most efficiently? Are they the best person for the job? And, you find that sometimes with that conversation, you realize maybe people are duplicating work. Maybe they haven't spread the work out correctly. And there are times where you truly can prove that, they're going to need someone else. Overtime is always one of the big factors I try to look at, is how much overtime are we paying people? And, and is it justified overtime? Yeah. And, of course, the answer always is, oh, yes, it is. But, you step back and say, well, what is it that they're doing on the overtime?
Yeah.
And, it's actually been fascinating to me. There have been times where I've had departments that are doing a lot of overtime, and then you find out that they're doing unnecessary reporting.
Right.
Because that's what they've status quo I've always done. Well, that's a report. Well, who's reading that report? Then you ask the person that's getting the report, oh, that's useless to me. I don't read it. Well, we paid this guy an hour of overtime to create that report for you. Oh, well, let's not do it anymore.
Yeah.
And so, again, we go back to the conversations, don't we? But that's one thing that has always worked. And I try to cut off the combativeness early on. That's always right off the bat. I know you're probably needing some more help. And also revenue growth. Try to measure that department's revenue growth. Have they had substantial growth? And what does that look like? And sometimes it comes down to that you maybe can justify it, and sometimes can. And you try to share with people the facts and give them the best that you can. But that's the ultimate challenge. And again, you have a tendency as accountants, CPAs, CFOs, we have a tendency to be the bad guys.
Yeah.
Seen in that.
Yeah. I think I think what I hear you saying. So I liked what you said there. You said involving HR can sometimes be helpful, but I think also sort of being in touch with kind of how the person is really spending their time. I mean that,
Mm.
and I don't know. So, do you use maybe operational KPIs and that kind of stuff? Too. I've heard some CPAs that have said to me that that's how they kind of can justify headcount is that if they're keeping track and they say that we need an extra, person on the IT help desk. Well, okay, well, how many tickets, on average, should a help desk person be fielding versus
Right.
how many is this person actually fielding? Because if it's over that, then yeah, they probably do need some help. But if it's under that, then we're wondering where that person is spending their time.
Yeah.
I don't know if is that kind of along what you're saying, or am I
No, yeah, no,
misphrasing?
you're right. Yeah, no, you're right on target, David. I think a lot of it goes down to that when you look at again, this is probably why I mentioned the HR is performance reviews. How people are really performing, and how is the management measuring that? But you're also right. What are people spending their time on? And I think KPIs are good. One of the challenges I've always seen with creating KPIs, especially for our overhead departments, is we're seen as we're just departments that cost money and we don't generate any revenue.
Yeah.
Now we can improve a company, like you're mentioning, like an IT, help desk tickets. Well, how many are they getting? Why are we getting so many help desk tickets?
Yeah.
And people forget that if help desk doesn't exist, then guess what? You're probably not going to be processing any paperwork. Accounting, well, if you don't have a payroll department, people aren't getting paid, and so there are those factors of helping management, and that's again conversation, but you have to help management understand what the overhead departments are doing and how they're performing. And help desk tickets are an easy way to something easy to measure, but then that evaluation that it's important when you sit down with people to know what their roles are, as you're saying. One of the challenges I found is that too often management doesn't fully know what their people are doing.
Yeah.
And, sadly, it shouldn't come down to, and this is really a failure of a lot of business I've seen, that they're not having a good, consistent conversation with the teams. And it's from all the levels. What are people really doing? And you shouldn't be waiting till budget time. It shouldn't be waiting till review time. That's the conversation that you should be having all the time. Is if someone's meeting certain performances, are they meeting them or not meeting them? And those KPIs, they are critical because they give you that data, that something that value that you can really look at and say, how are people really performing? But it is the ultimate challenge that when you sit back and say, what is it someone is doing with their day?
Yeah.
And it's fascinating. If you ever, of course, I think it's good for accounts to get out and about too, so people get out and know that they're not the enemy. But it's fascinating when you realize that someone is maybe told they're doing a certain job, and you come to find out they're actually doing a whole different job.
Yeah.
And I'll give you a great example. Just recently, one of the companies I kind of assist, I found out that someone had changed departments. They were great at the old job they did. They got a promotion and moved into a different department. And guess what? People are still calling them asking for help in their old department.
Oh,
so they didn't do
okay.
a full breakaway, but if you look at that person's KPIs, they're long in this new role long enough that they should be faster at it. But you come to find out they're not faster because the other department is still asking them a lot of questions and still, and it's sometimes easier. And we all make the mistake. I know I've talked about that. Sometimes it's quicker to do it yourself than you tell someone else to do it.
Yeah. Yeah, no,
So,
no, yeah, no, that's
yeah.
and that's very true. And I think especially with small businesses too, that's a big
Yeah.
danger where you have somebody who's kind of, we've said
Oh,
that
yeah.
they've switched roles, but they really haven't. They're still kind of
Yeah.
got that residual there and things like that. Um,
Sure.
have you ever, a kind of a newer idea is this idea of flexible budgeting, where
Yeah.
basically we base, kind of our budget on what actual results. So like what you might do is you might, if sales are up, then we up, certain variable costs, things like that, where if sales are down, we push those down and things like that. Have you ever worked with like with any flexible budgeting or anything like that?
Yes, absolutely. And I've sometimes called it a fluid budgeting.
Right.
where what you're doing is fluid. And I struggle with them, I will say, only because to me, it's almost like a forecast again,
Yeah.
where I'm going back and it's maybe a little, usually like we're talking about forecasting can be a little higher level. And so is this going to be a more detailed budget that is more fluid, or is it going to be a forecast? And you have to be careful because we keep crossing into that, forecast versus budget. And at the bottom line, does it really matter which thing we call it? What is it that serves the business the most?
Yeah.
A lot of
Good
my,
point.
large companies, they love budgeting, and budgeting really helps them, and because they're a very big ship. But then let's go back to my Titanic analogy. So you got the Titanic versus someone's little speedboat. Which one's easier to turn? Well, obviously the speedboat is easier to turn. The Titanic is going to take a lot of people to make it work and turn. And, it takes everybody working together in a different way.
Yeah.
So I think each business, each industry has to adapt. And we were talking about different industries. But a lot of my small business clients, I try to tell them, they're always commenting, well, I like a budget. And I say, well, budget is great, but we still don't know what your next month's going to be.
Right.
And you may not make it till next year. And so I've worked with a lot of my clients to create forecasting. We have worked on budgets because I know that they've got some capital expenditures, but letting them start. A lot of small businesses, and you're not talking about this several times, a lot of small businesses struggle with just the day-to-day.
Yeah.
They struggle with even understanding. And I don't know how many times I have a conversation with a lot of my small business owners, especially as they've grown and they've added a bookkeeper or usually not a low-level accountant, because, accountants usually will force you to have that conversation. But usually a bookkeeper will just say, hey, you know what, the boss leaves me alone, must mean I'm doing a good job. And every time I go into a new small business, usually they're struggling. And I say, okay, well, show me your financials. How you doing? And it's always the same thing. Well, sales are good.
Yeah.
And well, we got people coming to the door. Well, how's your cash?
Right.
Well, we're paying bills.
Yeah.
And, so we step back and say, whoa, get in touch with these numbers again.
Yeah.
And again, I've worked with very large companies, and they like you said, they have their structure, they're set. But the small businesses, I love it because they're a whole different challenge.
Yeah.
But getting them to look at their numbers is such a challenge.
Yeah.
And when they look at their numbers, they're like, oh, now that's why my tax return looks like I'm showing a loss.
I see.
So let's have those conversations with them. But I think one thing I like about budgeting is, again, for future planning, future FTEs, things like that is good. A forecast, though, can get a small business engaged. And, that's a big deal, is getting people engaged with their numbers and not afraid of them. A lot of small business owners, it has shocked me over the years I've done this, that they just are afraid of what their numbers are. I don't know if they're afraid what they'll tell them, or they're just turned off by looking at numbers in general. So that's a challenging conversation.
So I think what I hear you saying is I think what I'm hearing is that regardless of the terminology, budget versus forecasting, we need to connect the process, whatever we're calling it, to the actual business need itself. Right. And helping those that are in charge to sort of be more engaged with the numbers side of the business. Is that fair?
Oh, yeah, that's absolutely fair. And I know maybe we've gone off on some different avenues, as we've talked about it. But you and I have talked about these things before. I've done this so long, and I always look and like you said, the budget comes out, and everybody just has this. They eye roll, or they just shake their head, and why again? And we have disconnected from the process. Yeah. And accountants need to re-engage. And we're much better than what I think we were in the past. It used to be where we just generate numbers and we weren't engaged in the overall process. And I think you nailed it when you said process, because it is. The budget's a process, handling financials is a process, and really forecasting is a process. And getting that locked in means that we can help our businesses succeed. And isn't that why we're all in this? Is the business succeeds, we make a good living, and we provide for our families.
Yeah, I mean, gone are the days, and I've said this in a lot of my CPE courses and things like that. I mean, gone are the days where the accountants are just sort of sitting in the back, kind of cranking through the numbers. I mean, you really are supposed to be kind of a strategic business partner, and the budgeting, kind of forecasting side of that is kind of is one piece of that role. It's an important piece for sure. But I think kind of having an eye towards that larger goal of kind of being a strategic business partner, I think is important.
And we need to sell that.
Yeah,
Accountants have got to sell
yeah,
that. We need to sell that we're strategic business partners. We're not anybody's enemy. We're not the guys. And unfortunately, I had years ago a CEO of a company said, "You're just the no guys. We just say no."
yeah, yeah,
And that's because, and I look at him and says, "Well, that's because you're always saying yes."
yeah, yeah.
Sometimes we have to, but if we just have that balance, maybe sometimes the answer is a maybe.
Yeah, yeah. I always used
So,
to use the analogy of a hockey goalie, where it was kind of everybody was kind of taking shots on net, and kind of your job was to figure out, was to stop the ones that were unnecessary for sure. So
sure, sure, yeah.
let me ask you this. So I'm sure that some of our listeners, they may be newer CFOs and maybe newer to this process. Any sort of like rules of thumb, best practices, things like that. If they're setting out and they're trying to set forth maybe a budget for a smaller company, a startup, maybe a company that hasn't had a budget, kind of a formal budget process before. Any sort of tips for any of those folks that may be out there?
Oh, absolutely. And again, it depends on the industry, depends on the structure. But let's say if you're a type of industry that they very consistent budget model, then I would actually ask for recommendations from other people, what they've used in the past. Because if you
Yep.
also try to change that budget process and something they've used with something newer, you could run into some problems and some pushback, even though you may have great ideas. But once you get that structure with someone like that, then you can start stepping it back and saying, "Hey, here's some new ideas." Like you mentioned about the more fluid budgeting process. I think for someone that's a startup, and again, you have to go by what it is the company you work for. What are they in? What mode, what level are they in? So if they're a startup, what is their biggest concern? And like we're talking about, is it cash flow? Is it some type of revenue generation? Is it landing that new some type of new financing, which means that we have to build banking relationships, and what is that going to look like? And then for mid-sized businesses, it is that day-to-day challenge of the people that they keep. Are they able to keep the head counts that they have? Salaries and wages are always a challenge. What does their labor force look like? What is their industry? And then for small businesses, which really the people are, especially with the growth of small businesses, there's also so much failure of small businesses. And for them, it's helping them get in touch with what does it even look like? What do their numbers look like? What does a budget look like? And, how are they going to live by it? It's amazing to me how often, it's a joke for accountants have, because we always hear, "Oh, I can live off peanut butter and jelly for the rest of my life." No, you really can't. You maybe you'll make
Yeah.
that for some time, but what does the future really look like? And I think for that group, especially for accountants, if we can engage with them early on in their startup phase and help them understand what they're doing, what is their market, and growing that. So it depends on each level. One of the things I've always found that is the most straightforward is taking the current financials, studying, as much history about them as you can. Also looking for ways to get comparative financials with other industries. Reaching out to your fellow CPAs or accountants. From maybe you won't be able to get a competitor, because obviously people won't share details like that, but you can get a lot of data from the U.S. government. There's a lot of opportunities that you can gather data, especially today's times with using your Google searches or other platforms. Then you can actually find how is it that these companies are performing and what does their growth actually look like, and give yourself some insight from that process. You don't want to go into it and just say, "Well, here's your financials from last year. Here's what I think you're going to do for the rest of the year." Okay, you want to add 2% and just grow from there. I think you've got to create a process, but also, I know this is going to sound strange, but I think you've got to be true to yourself too. What makes the most
Yeah.
sense to you? And you got to feel comfortable with it, because at the end of the day, a budget, as much as we hate to say it, a budget falls on us. It's a representation
Yeah.
of what we do. And
Yeah.
it's got to be something that you feel comfortable with.
Yeah, I think that's true. I mean, so there is a little bit of kind of what you are comfortable with. I think that
Um,
kind of goes along with that. And again, I mean, I think what is ultimately what are you doing with the budget too? I think that can make a
Mhm.
huge difference there as well. I would also offer too, I mean, one of the things that I think it's really important too is really understanding kind of what really drives your business. Don't spend time, trying to figure out, your office expenses if that's not really going to be a business driver, right? I
Mhm.
mean, if your business driver is based off, ad sales or something like that. I mean, that's where you need to spend the really, the thinking time, right? I mean,
Yeah.
so you really put some thought into, the drivers that are really going to make a difference for your business. The other stuff, is less important and probably deserves less of your time.
Oh,
Um,
yeah,
you
you're
know,
absolutely right. Yes.
you know.
Yeah.
I mean, if
Yeah.
we're counting pens, we're probably not in a real good spot.
Yeah.
so,
No,
so
and
you
and
know.
you're right. And I think, of course, that's where a good budget comes in, is that you can see if office expense or things like that is off kilter, and maybe people are counting, maybe they're not counting the pens like they should be.
Vic, so I know that you do a lot with coaching and corporate coaching of small businesses, and if folks want to get a hold of you, how would they go about doing that?
Oh, yeah, terrific. I would love to have a conversation, and I really love working with small business. I love working with new accountants and trying to coach them, helping them understand the industry, but also business leaders and the CEOs. And so, my best way to reach me would be in my email at info@tayloraccountinggroup.com. So it's Taylor, TAYLOR group.com, or my webpage at tayloraccountinggroup.com. Or your virtualaccountingteam.com. And so we love working with small businesses. I work with a lot of the larger businesses too, because I've found that general managers, CEOs, they get struggles too. So I try to help them snap out of some of that too, and bridge those gaps of talking to their teams. So those are best ways to get a hold of me.
All right. Well, that's fantastic. Well, Vic, thanks for joining us on this episode of Accountable, and I hope that folks got some good tips, and maybe that budgeting process maybe isn't so bad now.
Yeah.
So maybe we made a little bit of progress
Yeah.
on
Don't let
that.
it scare them. Yeah. Don't let it scare them.
All right. Thanks so much,
Yeah.
Vic.
Thank you.
Thanks for listening to Accountable. Be sure to subscribe for more interviews and insights from today's business leaders. David Peters is a registered representative offering securities through Cetera Advisor Networks, LLC, member FINRA SIPC. Advisory services offered through Carroll Financial Associates, a registered investment advisor. Peters Tax Preparation, David Peters Financial, Carroll Financial, and Cetera Advisor Networks are not affiliated. He is located at 1657 West Broad Street, Unit 5, Richmond, Virginia, 23220, and can be reached at 804-332-1373. The views depicted in this material are for information purposes only and not necessarily those of Cetera. They should not be considered specific advice or recommendations for any individual.